Hey, welcome back to YT Finance, which is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies stock, ticker symbol PLTR. We will be discussing what the PLTR stock fair value price is, which can refer to either a broad measure of a stock's overall value, or it can refer to the worth of a stock based on the underlying company's assets and liabilities that are located on their balance sheet. But today we are referring to the broad sense of the word by using Palantir's free cash flows and the LA Stevens valuation model to help us calculate Palantir's fair value. In general, you don't want to pay over the stock's fair value price because that would be a bad deal on your end, so ideally, we would want to pay under the fair value price so it can later appreciate in price to reach that fair value estimate. But recently, this article has come up by Seeking Alpha that says that the PLTR stock price only has a fair value of $5. So I will be walking us through this article, and after its completion, I will respond to it. So I will be presenting both the positive bullish case for the PLTR stock and the bearish negative case that the article is meant to convey, so let's begin. Palantir is a big data software analytics company that has been falling in price recently along with many other growth stocks. The author of this article believes that Palantir is falling due to Palantir's lack of value. He thinks that the company is not scalable, that they have no economic moat, and because of their lack in profits. So he believes the PLTR stock will continue to fall all the way down to $5 per share. However, the author does mention that Palantir is doing an outstanding job at winning new contracts, signing agreements, joining joint ventures, and landing various government contracts with the US Army as well as Space Systems Command. The author also mentions how Palantir closed 54 deals in Q3 of 2021, which were worth anywhere between $1 million to $10 million each. This means that Palantir has increased their total deal value by 50% year over year to $3.6 billion. He says that these are the reasons why the PLTR stock price is so high, because this news has hyped up investors to blindly invest into the PLTR stock and inflate the price. So far so good, and we can see on screen that Palantir's commercial revenues have increased by 101% year over year to $2.2 billion worth of deal value, which I predicted in a previous video, because Palantir's growth will come mainly from their commercial enterprises, by my estimates, so the fact that the author started off the article by saying that Palantir is not scalable, but then goes on to state how Palantir has been scaling up their deal value with new customers is very counterintuitive. But wait, it gets better, because then he goes on to talk about how Palantir has also been scaling their revenues, so listen to this. Because Palantir has been gaining new customers, their revenues have increased by around 36% year over year to $392 million in the third quarter alone, and on top of that, when their fourth quarter revenues come in, analysts anticipate and estimate that Palantir would have increased their revenues by 40% over the entire year period, which is more good news for investors. Here is where the bearish negative points come in, and investors should be aware of these even if you are bullish. The author says that despite Palantir's increasing revenues, they fail when it comes to producing profits. He says that for a company that has been in operation since 2003 and has yet to generate profits on a GAAP basis, it means that Palantir has failed to scale and therefore cannot scale. However, during that time, Palantir was just doing government contract work and they did not even have their commercial business yet, which again will outpace their government revenues according to my estimates in the next few years. So this point is totally ignored, and the fact that their commercial business is new and will be bringing them the majority of their revenues in the future, which eventually will lead them to profitability, was totally overlooked here. On top of that, Palantir is set to scale their revenues by at least 30% until 2025, according to both Palantir's management and various analysts. Next year, the company is set to bring in around $2 billion worth of revenue or more. However, I do want to say that the author is correct about Palantir's lack of profitability, and some investors only like to invest into companies that are already profitable because it lowers their risk of any potential losses. Because of this, the author says that Palantir's revenue growth does not matter if they cannot produce profits, so he concludes that Palantir has created a business model that is unable to deliver profits, which is ridiculous because Palantir uses a very well-known SaaS business model, which stands for software as a service, which is one of the most lucrative business models that a technology company can possibly have. Then the author goes on to say that how can investors possibly invest into a company with a 22 times sales multiple? He is completely shocked that investors investors are willing to pay such a large premium for the company right now. But if we look closely, a 22 PS ratio is not even that bad for a technology growth company such as Palantir Technologies. So I will touch on this more later in the video when I give more of a defense and use my own slides, but right now we're just going to stick with this article. He goes on to say that even though Palantir has dropped more than 60% in price, that it's still trading way too high. So instead, he thinks that if Palantir would trade at a sales multiple of 5, that would calm him down some, but he still thinks a sales multiple of 5 for a technology growth stock is still too high, which is hilarious to me. So based on the 2022 revenue estimate of $2 billion for Palantir Technologies, by his estimate, to meet his arbitrary forward PS multiple of 5, it would need a $10 billion market cap, which would mean that the PLTR stock price would be worth around $5 per share, which would equate to around a 70% drop from Palantir's current stock price. So before I start my rant, let's have a brief summary. The author said that Palantir has won some contracts, but not enough for it to be impressive, and the revenues that they are generating from those contracts are not making Palantir profitable. He says that investors no longer want to pay a high premium for growth stocks, and I agree with that, but not because of anything that Palantir has done, but rather because the Federal Reserve could increase interest rates in March of 2022, which is bad for growth stocks, which is why Palantir, along with other growth stocks, are pulling back right now. He said that after over 20 years of Palantir being in operation, they are still not profitable, which is true. So he says that they are a bad company. But I already briefly talked about this point by saying that discounts Palantir's newer commercial segment and business, which has only been in operation for a few years, which will literally be their key to achieving more revenues, and that will lead them to profitability. Lastly, he said that Palantir needs to trade at a forward PS ratio of 5, which equates to $5 per share. However, he gave no evidence and he showed no math about why Palantir should have a PS or a forward PS ratio of 5. That would make them trade at $5 per share, which would put them at a $10 billion market cap. But he gave no evidence of why Palantir should be trading that low. In a previous video, I personally calculated Palantir's fair value price using the discounted cash flow model, and the answer to that question is $31. We used the terminal value and the present value of terminal value, and again we got $31. Also, another Seeking Alpha article says that the PLTR stock was trading under $29 and that it's a great deal right now because their fair value is above $29. Some analysts think that Palantir will scale from around $23, which is what analysts think the stock price should be trading at, and it's going to scale all the way up to $132, and that came from another Seeking Alpha article, which used the LA Stevens valuation model, which I also did a breakdown on. Now, we also have some very bullish investors that compare Tesla to Palantir, which I personally don't agree with, but you can tell that investors are very bullish about this company. Finally, we have a Morningstar article, which talks about their economic moat and their fair value, which is again $31 according to Morningstar. This $31 price estimate actually was an upgrade from the previous $28 fair value, and this was based off of Palantir's very strong growth prospects, especially because they have an adjusted earnings per share of 4 cents. The Morningstar article even went on to say, and I quote, "We expect steady government backlog and new contracts to account for more than half of sales for years to come. We believe commercial can become the larger contributor in the long term," end quote. And again, I have been saying that literally for months now. But if we go back to the article, it says, "We positively view the momentum in commercial and Palantir expanding its use cases through new modules, which we believe serve as hooks to initially land a customer before proliferating Palantir's use cases across an organization and its ecosystem," end quote. On top of that, I think many investors overlook how Palantir has a 30% adjusted operating margin, and that's going to give them strong results well into the future. Palantir also wants to increase their sales and marketing so they can gain more customers, and this is just going to help their growth both in the commercial sector as well as their government sector. Now, I am not saying that this article is wrong. It is possible for the PLTR stock price to drop to $5 if their forward price to sales ratio also drops to 5, which would give them a $10 billion market market cap. But I think the real question is a PS ratio of 5 realistic for Palantir Technologies? Well, we can answer this question by looking at both the industry PS ratio and the PS ratio of some of their competitors. One of them being Snowflake, which literally has a PS ratio of 87. Now, it is possible for the PLTR stock price to continue to fall, but it's nothing wrong internally with the company. It's either macroeconomic factors, such as the Federal Reserve increasing interest rates, which is having all growth stocks pull back, or investors just don't want to pay that high of a premium for Palantir, and maybe a PS ratio of around 13 could be more stomachable for more investors. Lastly, I want to add that the author was correct when he says that Palantir is not profitable on a GAAP basis, but they are profitable if we look at their free cash flows. But with that being said, I want to hear your thoughts down below. Comment your thoughts on the PLTR stock, subscribe if you are new, like this video right now, and I will see you in the next YT video.